So I explained that fundamental analysis tells you what company to buy, why you should buy it, why you should buy this company. Then technical analysis tells you when to buy. You are going to see different people in the stock market. You are going to see hedge fund managers. You're going to see mutual fund managers. You're going to see us, people like us, retail investors. These are people you see in the market. Now, I explained that of
What did
the
you call us? Retailers.
we are retail
What did you call
investors.
us? Retailers.
Retail investors. And that the stock price does not reflect the true value of the stock. And this is because of the sentiment of the people. That is one. And two, the government and environmental factor. The government can decide to influence the stock market by either raising interest rates or lowering interest rates. Most of the articles you're going to start reading, financial articles you're going to start reading about stock, sometimes revolve around the interest rate. If the Fed is cutting interest rate or if the Fed is increasing interest rates. This is how it affects the market. When they increase interest rates, it means borrowing becomes expensive. And they could increase interest rate for various factors. Maybe because there is inflation and they want to curb out the excess cash in the economy. So they raise up interest rates so that people withhold themselves from spending too much. The reverse is if they decide to reduce the interest rate instead of going up. So trying to make people to keep borrowing, trying to put more money in the market. So if you can write this and research later, there's what we call the hot and cold economy. And the Fed's job is to regulate it.
What's the full meaning of ETF?
Exchange traded funds.
So what you're trying to say now is that there is an ETF for commodities.
Yes. There's an
ETF
ETF.
for what else?
There's an ETF for commodities. There's an ETF for bonds. BONDS. We've not gone to that. There's ETF for still the.
We're not going to that.
You've not gone to that. We have banking ETF. We have real estate ETF. The real estate investment trust. So this is like a group REITs, real estate investment trust. So these are companies that they are either companies that finance real estate deals or companies that actively invest and build real estate. Meaning that companies that are into buying of land and building shopping plaza, building office space, or companies that are into building residential apartments and shortlets. These different companies, when you find them in the stock market, they are called REITs, real estate investment trust. So another way of investing in real estate without actually owning land and receiving good dividend is by investing in these companies that do business in real estate.
Yeah. And the further away you are from the soil,
The more money you make. John Obidi.